Hi everyone, Jeff Yastine here, and welcome to another edition of Market Insight. And I'm joined by my friend and colleague and editor of Automatic Fortunes, Ian King. So Ian, welcome.
Hey Jeff, how's it going this week?
It's going well for me, and I would say that it's going well for the market. I know you would agree as well. The Dow's up like 700 points while we're taping this thing. What's your take on why this is happening? And at the same time, if I can just toss in this news nugget, on last week, we saw retail sales down something like 16%, 16.4% for April, the largest monthly drop ever recorded, and the bankruptcy of JCPenney over the weekend. So square all this for us, Ian.
Well, I mean, the retail sales is a backward-looking number, right? And the market's always looking at the future. The big news this morning is that Moderna said they have positive phase 1 trials on their coronavirus vaccine. And there's a bunch of companies that are really getting closer to coming up with a vaccine. And no one's really sure of the timeline. You hear some people say we're going to have one by the end of the year. Then you hear other experts say 12 to 18 months. So I think everything's still kind of a fluid situation. And I expect to see some of these trials fail. So we'll have days where the market drops 500 points because a company that we thought was getting close to a vaccine doesn't pan out that way. So, it's hard to kind of celebrate this news too much until we have a real vaccine on the market. I would anticipate, another thing hitting the market the other way. In terms of retail sales and JCPenney, it's funny you brought that up. I mean, when was the last time you went to a JCPenney anyway?
I can't think. Probably when I was a kid, many years ago.
Right. I mean, this company's been slow walking towards bankruptcy as far as, I can remember. And it's about time they shut down JCPenney's and make these malls into more of an experience, bring in the trampoline gyms, bring in the CrossFit centers, provide the kind of destinations that people want to go to. A lot of these malls are now converting into, as you said before, mixed use. So you can have condo buildings, then you can also have shopping. And I think that's what the public really wants, not these giant department stores where nobody shops anymore. What do you think of that?
Definitely. There are units that should have gone down a long time ago and have been, as you say, a slow walk. Let's go back to the idea of vaccines in the market, because I disagree a little bit here. It sounds like you're saying that you think the market has been going up this morning and that the market will be in the future driven to a large degree by progress or not on vaccines for a coronavirus. I believe a little bit differently. I think the vaccine stuff is out there. It'll be knee-jerk reactions, an excuse for people to sell or buy the market, for the day, for the afternoon, that kind of thing. But I really feel like we've pretty much fully discounted a lot of the worst of the coronavirus situation. And between the stimulus, everything that's happened with the Federal Reserve, and this narrative that we still have, like, here in Florida, we're still just starting to open up in a lot of areas that were previously closed. And I think that narrative, like retailers and then the airlines and the cruise lines and a lot of the leisure type stocks have not really moved. They haven't really participated much at all in the rally we've seen the last 6 to 8 weeks or so. I think those are what's going to carry us, as well as a lot of the energy stocks as oil prices have started to tick up. But you tell me, what's your take on this? Or is it still vaccines are really where you need to be focusing on to know whether the market's going to move higher or not?
Well, remember the survey we looked at last week? It seems like none of our readers are going to take a cruise. I think it was 25% said they'd be willing to take a cruise without a vaccine. So those stocks and anything related to travel, whether it be airlines or car rental agencies, are going to benefit the most if you hear companies getting closer to a vaccine, because they're the ones that are most beaten down and the ones that nobody wants right now. Okay. And it's interesting because I looked at Zoom this morning, and Zoom was down because of the vaccine, because less people will be working from home if we have a vaccine. And so there'll be less use for Zoom. The other use case for Zoom is families. My in-laws, we do a family Zoom chat every Sunday, and we would rather see each other in person if we could, obviously, but having Zoom allows us to make that connection. And I don't think we'll need Zoom anymore, right? If we have a vaccine and everybody can travel and go visit each other.
Well, but let me ask you, because if you're investing in Zoom, are you really investing just, I mean, if you're investing or speculating for a day or a week or a month, buying Zoom makes sense, for the coronavirus, buy it now, or, I've bought it 2 or 3 months ago, sell it now, that kind of thing. But it seems like at some point, the market has to come back to, and investors have to come back to the ideas of what are the values behind these stocks. If we're getting back to some degree of normality, even if it's a different kind of normality, we've got to start revaluing these stocks. And it seems like in this case, you would start to see the market move higher based on a lot of that, because again, people, regardless of whether there's a vaccine or not, people are going to have to start traveling again. Even if they don't want to travel, they'll still have to travel, because that's the only way you can get from point A to point B relatively fast on an airline. And you have to start taking some of those risks, even if you don't feel completely comfortable with it. It seems like this is part of the anticipation that we always talk about, in that you can avoid airlines until you have a vaccine. But if you were an investor, the difference is some airline stock you wanted to buy at 50 is going to be 100 or 150 by the time the vaccine comes out.
Exactly. And as we move closer to the vaccine, these stocks will start to lift as well and start bringing the market higher. And your point. So I always look at things from a top-down perspective, and the viewpoint from 30,000 feet is not so much these individual companies, but what is the Fed doing? And there's a lot of bears that have been dismissive of Fed action since the great financial crisis. Be dismissive of Fed action at your own risk is what I say. Never fight the Fed. Jerome Powell was on 60 Minutes last night, and he's basically said, yeah, we'll just keep printing money. And the Fed knows that they stimulate the economy through a wealth effect. So they want to bring down rates on mortgages, bring down rates on corporate bonds. That floods cash into the system more readily. And that also, because their rates are lower in fixed income, risk starts to flow out the curve, and you wind up getting more money flowing into stocks and other speculative assets like cryptocurrencies. So this is the most unprecedented amount of monetary stimulus we've ever seen in history. And when you look at what happened earlier in this year, you can think of it as a black swan. We had a market drop out of nowhere that dropped over 30%. You and I were expecting maybe a 5 or 10% pullback. No one saw 30% coming. And when you have these black swan events, they travel in flocks. It's not just one black swan. The next black swan is that we're going to see the S&P at 4,000 in the next year and a half, because that is the least likely thing on everyone's mind right now, is the market to have an incredible rally off these lows. It happened after 2009. The market tripled off those lows. And in the smaller sense, it happened in 2018. At the end of 2018, we were headed for a huge economic recession. The Fed was on the verge of raising rates, and everyone said, what is the Fed doing? Are they crazy? It took one little tweak in Powell's message, and the market went from S&P, I think 2,400 or something like that, to 3,300 in 9 months. So dismiss the Fed at your own risk. I always say my rule of thumb is don't fight the Fed. There's more monetary stimulus than ever. And also this whole black swan thing, it's not one black swan, it'll be multiple black swans. So that's my views on the market, and I'm sticking to that.
Well, I would agree with you completely on this. My key message here for anybody who's watching this at this point is, focus on stocks that have good value. Don't chase after the ones that everybody else has been chasing after. In many cases, you're going to be buying stocks that were the hot stock, a month or two months, 3 months ago, and not the ones that are going to double and triple from here. So you got to be careful about how you're selecting stocks. But I think things continue to move higher, and you got to keep looking for where there's value, where you get your best bang for the buck. Ian, let you have the last word on this. How do you participate in this rally if people believe us, and I think they should, the markets continue to stair step higher from here because there's so many disbelievers out there? how do you participate in this without taking gigantic risks? Yeah.
So in our automatic fortune portfolio, we're focused on companies that are going to thrive in a post-coronavirus world, because this has been a seminal shift in business. You're going to see more employees working from home. It's going to be a perk that companies going to offer. For instance, Twitter, the company, not the app, is allowing all of its employees the option of working from home indefinitely if they want to. Google has allowed all their employees to work from home for the rest of the year. You're going to start seeing universities offer first and second year classes online. So you want to think about these software stocks and cloud stocks that are allowing you to do these type of activities, working and studying and education online, because we're seeing a huge shift towards more people working online than we were pre-coronavirus. And even when things open up, it's just easier to do things online. For instance, let's take Instacart. I never used Instacart before coronavirus, where you order your groceries on an app and you can pick them up in the parking lot, somebody comes out, or you can pay to have them delivered. I love Instacart now because it's so easy. There are simple things that I buy every week that I just hit a button on the app. They load it in the cart. Somebody puts them all in a basket or shopping bags. I drive to the supermarket and they put it in my car.
I agree, but how do you invest? Like, how do you take that Instacart theme and then invest for it? Just not without giving us picks from your newsletter, because people subscribe and pay for those, but go through the thought process. Instacart, there's millions of people out there just like you and just like me regarding Instacart. How do you invest for that?
So you want to look at e-commerce companies, and I'm glad you brought this up because I want to share this chart with viewers. E-commerce had slow growth the last 10 years. And then in 2020, we went from 16% penetration in retail sales to 27% in 8 weeks. So we're seeing a huge jump in e-commerce. Look at the e-commerce stocks. I mean, obviously Amazon, there are e-commerce stocks in China that are doing very well. And also any of these delivery companies or transit companies, think about Uber or Lyft, things that can move things from one place to another are the areas you want to look in.
Makes a lot of sense. Ian, let's wrap it up there. Really appreciate you coming on to Market Insight this week.
Always great to see you, Jeff. Have a great week, and I'll speak to you next one.
And for everybody, make sure to subscribe to our Market Insight YouTube channel, and we'll talk to you next week.